In this video, we'll be looking at the very basics of chart reading. I will take you through which charts to use, what you need to understand to be able to start using these charts effectively, and a couple of simple patterns that you can start identifying in the market today. So at this point in the video, I am going to assume that you guys are set up on some sort of trading platform. If you're not to worry, just watch my previous video. That'll get you up to speed to where we are now, and I'll meet you back here in a couple of minutes. Now we have a few different charts to choose from. The only important one for us is the candlesticks chart. The reason being, it's the best source of information the market can give us, and if we can understand these, then we can start using them to predict the direction of the market. To start with, we need to understand how to read the candlestick chart in order to gain anything from it. The candle has four basic elements: the open, the close, the high, and the low. Over a period of time, a candle is formed. So these candles can represent different periods of time. So a candle can be used to represent 1 minute, 5 minutes, 30 minutes, an hour, a day, weekly, and it goes on. So just for a basic understanding there, for example, if you start looking at a chart at 6 o'clock and you continue to look at that chart till 6:30, during those 30 minutes, 30 1-minute candles will be created. Now you can start to use these candles to decide which way you think that the market is going. Now that we have this data, we should be looking for anything interesting. Now normally this is support and resistance lines. So very simply, support is where it bounces off and goes up. Resistance is where it bounces off and goes down. Here are 4 easy patterns. Now these are simple patterns that you can use, patterns which you can start using straight after this video. The first one is a cup and handle. This is categorized, identified by a large rounded bottom and a handle. Cups and handles are bullish, double bottoms, double tops, depending which way it goes, depending on which way it is. What I mean by that is, if you've got a double bottom, you're hoping it's going to go up. If you've got a double top, it's going to go down. Now there are a couple of other patterns: head and shoulders, one of my favourite, and bear flags and bull flags. So there is inverse of all of these. The inverse of a head and shoulders is an inverse head and shoulders. The inverse of a cup and handle is an inverse cup and handle, so on and so forth. You get the point. So all of these patterns require confirmation before you should start trading them. Now, how do you get confirmation? What's confirmation mean? So what we'll do, if we look at it in a very simple case, the double bottom, we draw the double bottom. There's one on screen just here. And if we look, there'll be a neckline to that position where the line comes up and it's got a point to cross to then go higher than its previous, I say all-time high in the case of this pattern. It's got to break out the pattern, right? So if the pattern breaks the neckline, then you can be reasonably safely assured that that is confirmed. However, if you want to be a little bit more conservative, you can always wait for the pattern to break out and then retest the neckline for support. If this gets that support and then gets to bounce, well, this is massively bullish, and you can be very conservative and play this way, and you'll have sort of a better time in terms of percentage of win-losses. But this doesn't always come into play in the markets, so you could miss opportunities. So now we have an understanding of these basic patterns, how to identify them, and how to use them. What I would like you to do is try and have a go at these on your paper account. So as we may have discussed in the last video, paper account is a fake account, a virtual account, demo account, where you can play with Monopoly money completely risk-free and start building your skills before you start burning your own cash. Technical analysis is one part of what affects the price of an asset, and we've touched on that in a very basic way today. In my next video, we will take a look at what real-world scenarios and other technical indicators can do to help us improve our idea of what's going to happen. Thanks very much for taking the time to watch this video. I really appreciate that. If you wouldn't mind smashing the like button if you enjoyed the content, it really helps me know that I should continue to make this sort of stuff. And if you've got any criticisms or any critique, then you can, no, I'm joking, you can leave that down in the comments, and I'll try and take that on board. If you've got any video suggestions, anything like that, leave them down there. Alright, thanks very much. I've been Ben. Take it easy.